Okay, so we got to keep things moving right now. We're running a bit behind time. Up next, we have a panel about raising funds in Web3. Can we invite on stage Daryl Lim from TRIVE Digital, Ben Biedermann from ACURRAENT UG, Nicholas Chong from PitchIN, and our moderator Noelle Lee from Lydian Labs. Also, just a lead up to our main event at 5:10, where we have a live Q&A with Vitalik Buterin. We asked that if you guys are having questions for that live Q&A to keep them short within 30 seconds. If your question is longer than 30 seconds, I will cut you off, okay? So prepare short questions for the 5:10 Q&A. Noelle, please take it away. Thank you.
Hello, ladies and gentlemen. Good morning. Apa kabar? Oh, everyone is so serious. Is it this topic is too serious for everybody? So I think today we are talking about raising funds in Web3. I think that is one of the key challenge or a key issue that all the projects founders in Web3 are currently very focusing on and try to seek funding across the world. So today we will have our discussion around what is the fundamental difference between raising funds from Web 2 and also Web 3. What are the different ways of doing it? And also we will talk about challenges that we have right now in Southeast Asia and also some of the key takeaways that our panelists today for all our project founders. So let's start with a short and brief introduction from all the panelists. Welcome, Benedict.
Hi, thank you for having me. So, hi everyone, I'm Ben. I'm coming in from Germany, but I'm predominantly affiliated with Raid Guild DAO, which is essentially like a mercenary shop for Web3 development. But we're also having a couple of European ventures. We're looking at connecting Web 2 and Web 3 through digital wallets in Malta, but also in Germany. And now we're looking into Southeast Asia to see what's happening here, because I feel like a lot of interesting stuff is happening.
Thank you, Ben. How about Daryl?
So I'm Daryl. I'm the general partner at TRIVE Digital. We are actually a Singapore licensed fund manager. Traditionally, we've been investing in Web 2, but we started a Web 3 division this year. And of course, fun fact, we've invested in a centralized exchange here in Malaysia, tokenized exchange itself, but they headquartered in Singapore. And of course, we invest in pre-seed, seed stage startups. Ticket size ranges from 50 to 250K. Yeah.
Thank you, Daryl. And Nicholas.
All right. Hi, everyone. Nicholas from PitchIN. So PitchIN is basically a regulated launchpad. We are regulated and incorporated in Malaysia. We started off 9 years ago, very traditional, doing private market fundraising, helping companies to raise funds using private market shares, the private equity. This year, we launched our new product, two new products. We launched a secondary market for private market shares, and also our token launchpad, which is also regulated product. So we help companies to raise funds using equity and also tokens. Tokens can range from utility tokens all the way to security tokens.
Thank you, Nicholas. And hi, everyone. I'm Noelle from Lydian Labs. We are incubator cum marketing agency focused on advisory tech and marketing. And we do hyper-localized marketing across the whole APAC plus China regions. So thank you, panelists, for being here today. So let's dive into the first questions. Can you guys give us a brief comparison between different ways of raising funds, compare IPOs to different ways of raising funds in Web3. We have Launchpad, we have IEO, we have IDO, ICO, different styles. So maybe start with Benedict. Do you see, is there a very huge difference, or is it only on the timeline or method or anything that you want to raise specifically in terms of the comparison?
Yeah, thank you for the question. Now, when we look at the Web 2 landscape, it's either very short cycles. So you have a disruptive technology, a disruptive solution that gets you to the market, to the capital markets really quickly. Or you have really a long cycle. So it's very decisive, it's very clear. So the pathway that you take as a founder should be set in the beginning. So you're participating in an accelerator, you're participating, you're spinning something out of a university, and then it's very clear which path to take. Whereas Web3 is a lot more ambiguous. So you can survive a lot longer on grant funds, so you don't fail as quickly as in Web2, but also you can raise in new ways, in new modes. So for example, there's something called a Ether, which is basically a DAO-based fundraising where people or investors can withdraw their funds at any time if they do not have conviction anymore in your solution or in your product that you're trying to sell. So I would say Web3 offers a lot more color compared to traditional fundraising.
Thank you, Ben. So I have actually another question for Daryl. Do you see that the current Web3 fundraising is more degen? Like how is the due diligence process, or is actually just based on the networking effect that people have around to actually ease their fundraising process? So how does it go in the venture capital world?
I think when it comes to fundraising itself, to your point of how stringent the process is, we have seen evolutions, in terms of the process-wise from last cycle to date. I mean, if you guys know the 2021 days, you can simply raise around. Oh no, not even that. There have been in conferences that I've attended where valuation jumps within overnight. Actually, overnight valuation jump. That was the most insane thing I've ever seen during 2021. But now you wouldn't see that. If you actually are fundraising or have been fundraising, you would realize that the majority of the current Web3 VCs, they actually ask for a lot more information as part of the due diligence process, right? We start diving down into, okay, look at incorporations, we look at who are your previous investors, we check those documents are signed, transactions has been sent. We look at if there's any IP itself. We look into the team biographies, background checks on them. So I would say that right now, it's a bit more mature compared to before. And I think, the days of just simply doing a SAFT is over. I'm not saying that it's completely off the table. I'm just saying that we are seeing more deals where you see SAFE and warrants or SAFE convertibles being done more often than it's just token deals alone. So I would say that it's definitely more stringent compared to before. Yeah.
Yeah, thank you, Daryl. I think back in the 2017, 2018, people can just raise a lot of funds just through white paper, but today it's not longer in the la la land. So everyone needs to be aware about it and be aware of it and actually have a great preparation ahead. So next up, we have Nicholas from PitchIN and also with the ex-regulator background. Do you think that regulation is one of the kind of like key hurdles for people during the fundraising stage? And is there any different or like interesting way that people can actually raise funds through Web3 with the current landscape that we have in Malaysia?
Sure. Well, honest answer, I shouldn't say this because I'm regulated, but the honest answer is yes. I think regulations always creates impediments, but of course it's a double-edged sword as well. So I think as the industry mature, I think we expect more people to come into the space that include the mass market, which may not be as well versed as the degens are. And I think oftentimes, I think when regulations comes in, it's really to protect that segment. And speaking just to touch a little bit on regulations. So I feel that regulations. So we are a regulated launchpad, and essentially, what's important when it comes to raising funds, at least to the masses, is actually boils down to just 2 to 3 things, and that's essentially what the core of the regulations that we are following and what we do. I think number one is, I think in anywhere in the world, and this is something not just in fundraising, but all, even digital asset exchanges, is AML risk. You want to make sure that you are helping your issuers, you're helping the investors to manage funds that are coming in and being transacted within the platform, so that they are not exposed to AML risks. So that's one of the key part of regulations. Second part, which I think is the most important one and the part that still needs a bit of figuring out, is really just reliable information, making sure that information that is given out to the public, to retail investors, they can be relied upon. And that's really a core part of what we do. I think similar to what VCs do, because VCs, they have a very strong team to do due diligence, to make sure everything is fact-checked and things like that. But when it comes to retail, that's where platforms like us, we are relied upon to make sure to do the due diligence on behalf of retail investors. So that at least when they get the white paper, they get the term sheets, they know that these things are actually properly checked. The company can actually deliver it. So I think to answer your question, right, it's really a double-edged sword. Regulations does create some impediment because it does make time to market much lower, and it's quite bad when it comes to comparing it with the speed of which people are doing it in unregulated ways. But it also helps to get the retail, the masses to come in much earlier. So that's my take on regulation. Your second question, Noelle, I think it's about what are some of the unique ways that we can do fundraising over here in Malaysia. So I think for us, we have a very unique business model in Malaysia. So we are a regulated launchpad that also does utility token, right? I don't think you see that model very often. I think we are probably the one of, if not the only, regulated utility token launchpad in the world. I wouldn't say the only one. I think there could be a few more, but we are one of the few. And I think because of that, we do see a very interesting use cases, interesting markets. I think especially number one is being able to get Web2 companies to be able to launch their project in a safe and more controlled manner. And we do have a lot of interest in this space. So I think that's number one. We do have a lot of Web2 companies that's trying to launch their own community project, right? Being able to launch a project for their app, the community that they have already built, in order to sort of engage them a bit more. So we just closed one deal 2 months ago, about $2 million USD, just specifically for that. It's a Web2 prop tech company launching a project for their own community. So that's one interesting thing due to the uniqueness of Malaysian regulations that we can provide. And the second thing is, and this is more towards our vision as well, is because we are regulated utility token launchpad, we sort of have the permission and also have that sort of credibility to get retail investors onto good projects much earlier. Because oftentimes when it comes to access to project token launches, retail typically come in much later during the project lifecycle when it's close to getting listed on the exchange. It's more practical issues and also regulatory issues because if you structure it to at a much earlier stage, in most countries, it's a security, and that goes into a lot of regulatory concerns. And number two is accessibility, because it's just very hard to reach out to retail. But because in Malaysia, it's very clear-cut, projects can come to us at an earlier stage, a strategic round, for example, and they can actually structure a deal where VCs and retail can actually invest together at the same round. So I mean, just to highlight two interesting points, and maybe a third one, just one thing to cover as well. And this, because PitchIN, we do both the equity side and token side. So we are also working with companies to structure deals that covers both spectrum, like what Daryl was saying earlier, potentially an equity or safe note with a token warrant, and offering that to the mass market.
Thank you, Nicholas, for the insight of the current landscape that we have in Malaysia. So we do actually have a strong or matured framework that we have for Malaysia. So everybody do check out. So I think let's jump into the next questions. So for the previous 2 cycles, I think we see our keep looking at projects that are coming out from the West, but since like 2 years ago, or even like this year, is more obvious that many people that feel that the innovation actually come from the Asia, and in terms of user acquisition or even projects idea liquidity are actually centralized in Asia as well. So I would love to ask the panelists here, what are the kind of like key areas or any vertical that are actually interesting that or VC or even investors are actually focusing right now to search from the Southeast Asia? Let's start with Ben.
Yeah, maybe to draw from your intro, it is indeed true that we saw a lot of liquidity and investment like pipelines opening up like in Southeast Asia, even for Western projects. Now, from my personal perspective, like things like DeepIN, things that are resilient, things that look at connecting real world assets with the digital realm and Web3 are the buzzwords of this cycle. Not so much NFTs as we saw previously.
Thank you, Ben. How about Daryl?
I think there's several points to your question. I think one is how we've seen in terms of, I would say, liquidity or even talent-wise, we do see a lot of Western projects receiving more liquidity. And I would like to say that Westerners really great talking, right? But what we have identified as well is on the eastern side in Asia, you see actually innovation from a technology perspective. You'd be surprised that actually a majority of the good tech companies in blockchain are actually in Asia itself. And of course, when it comes down to what we're looking at or what's next itself, the way we break it down is based on our thesis, right? So for blockchain infrastructure, what is the current technological gaps? One of the things I look at is, of course, FHE itself, like fully homomorphic encryption. And of course, other thesis that we have is entertainment. That will look into mass adoption. And of course, for finance, it targets the liquidity fragmentation issue. So that's kind of like what we have as a broad thesis itself. But the thing is, things are constantly changing, right? I mean, every 6 months to a year, we see how things have, come up and go. Similar to like, examples of like, the DP narrative, the AI narrative, the RWA narratives. So these things come and go, right? So as VCs itself, what our job is that we do have a core thesis at hand, but the underlying trend that we kind of monitor, on a biannual basis, we kind of change it, every single time. Because of course, we are also working with other investors to also co-invest. And the honest truth is that everybody or most people do look into riding the wave itself, right? And of course, as project founders, that's something you also have to do.
Thank you, Daryl. An insight from Nicholas?
Yes. Thanks, Noelle. So I think so I probably take a different spin. I think the other panelists covered more sort of game-changing items. I do agree, right? If you are building something that is solving a real problem, whether it's a DeepIN or an infra or ZK, that's solving a real problem, I think that's definitely going to be a market, going to be investors looking for it. You just need to be able to tap into that. I'll take a different spin coming from a more localized approach from what I'm seeing on the ground. And also from what we're doing, which is to link to the mass market and also traditional investors. For me, I think three things I want to highlight. So one is really, I think when it comes to the whole idea of blockchain, decentralized systems, I think there are a lot of amazing things that's been built to get there. But also taking an example of how, for example, NASA, as they were trying to build a solution to go to space, they've created a lot of interesting applications that has seen commercial success. Velcro, for example, microwave, for example, are examples of how there are spillover technologies that have seen commercial success. I think as we set foot towards that idealistic vision, there are a lot of very interesting applications that a lot of the more traditional players have started to adopt. And that's why we have tokenization coming about, TradFi coming into this space. And we also seen corporates coming into this space. So I feel that is one angle that from a more localized perspective, it's not game-changing per se, but there is a huge market for that. And I think projects that will be able to bridge between this innovative sort of innovations with real-world use cases, Web2 that companies that have already their own traction, I think that will be very, very, very useful. I think I'll just leave it at that. Cognition of time, I'll pass it back to you, Noelle.
No worries, no worries. So I was warned by the MC that we have to tap into the last question when it's 5 minutes left. So let's dive into the most, I think, practical questions that I would love to hear from panelists giving advices to all the project founders here. What are the things that they should avoid of doing when they approach the investors? Or what are the steps that they should do before they go to the investors? So let's start with Ben.
Thank you. And one of my co-panelists might not like my answer, but I would advise to wait as long as possible. So like what we've seen is, let's take the example of BitDAO or Mental. They've come up with like a scout program where they create like a grant distribution scheme so that you can actually get a lot of traction. You can build up your project so that when you're actually approaching investors, you have consumers, you have customers, you have some traction, you have something to show for, and of course, you have a larger valuation, so it's much easier to negotiate to make it work both for you, but also for the investor then that you want to try to get on board. So really just make sure that you get traction and that you grow your project in a way that is meaningful before you're seeking out external capital.
Well, for me, if I could give one advice to founders is don't lie. We will find out, especially due diligence, especially raising from a licensed fund manager. Please do not lie. We have come across situations where projects have claimed they raised from X, Y, and Z, and when we do the due diligence checks, didn't happen at all, right? And you have to understand that the VC world is very small. Everyone talks to everyone, right? Because we want the reference check on why certain VC pass around or accepted around, what's their thesis behind it as well. But the thing is, don't ever lie about anything you have, because eventually people find out, people talk. I think when it comes to fundraising advice, is one thing I always share is this might be counterintuitive because obviously it's against me, but always also do a reference check or a check on your VC itself. A lot of VCs will claim that they are strategic. Most of them aren't. We actually do provide a lot of value, right? And that's why one of the first things we always tell founders is go and ask other founders about us, especially our portfolio, and see the kind of value they bring to the table. And that goes back to the project founders itself. Is if you want to really find someone that's able to support you, you need to find out who else have they supported before, so that at least when they claim what they claim is true.
Thank you, Daryl. Nicholas?
Yeah, so I do echo, I think, especially the part on timing. I think timing is definitely very important. I mean, you could always do fundraising when you have a piece of paper and idea, but there's not much leverage, not much traction you can show. You may want to be consider whether it's the best for you, right? So that's number one. I really echo that sentiment a lot. Applies to any investors, right? If you are going in with a piece of paper, the valuation and the price that investors are expecting is going to be very much different as compared as if you to go in with a product that you can show or actual users that are using your app. So that's very important. I think second thing is also probably a more practical advice is also don't grow your team too fast. I think keep it lean so that you can manage your operations costs. And especially if you are still trying to go to your market or trying to actually get your first business. So I think these are two that I would like to share. Thanks.
Thank you, all the panelists. So I think for all project founders, don't rush, don't lie, and always timing right. So I think fundraising is difficult for some people, but for some people not. But after fundraising, there are also a lot of steps that you actually need a lot of strategy. value that coming over from all the investors that you have. So you do need to check or select the investor properly that can actually help you in the long run as well. So I think that goes our panel discussion, and maybe we can jump on to the Q&A sessions.
Okay, thank you very much. Actually, there is no Q&A session, unfortunately.
Okay.
Yeah, we are running really short on time right now. Guys, Daryl, Ben, Nicholas, thank you so much for your insights. Nicholas, I need to take a closer look at your socks later. Noelle, thank you so much for sticking to the time. Ladies and gentlemen, another round of applause for our panelists. Thank you.